Okay, traders, welcome to another session of Smart Charts. Today we're going to be doing a backtest. I'm going to show you how I backtest in TradingView. I don't know if it's the right way. I don't know if it's the wrong way. All I know, it's the way that I do it. I like to use two charts when I backtest. I like to use my higher time frame, which you see on the left-hand side here. It's on the 15-minute chart. And I trade the Dow Jones almost exclusively, so that's what I'm going to backtest today. The other chart that I have up is the 2-minute chart. If I click on it, you can see that it is the 2-minute chart, and I can see it over here at the top left-hand corner as well. You do not have to have the premium version to have what I call a two-up or two-chart layout. So we're going to do a backtest today. So the first thing we want to do is go take a look back in time. We do that with the replay function up here, the top middle portion of the interface. And if you do have a two-up, what I call a two-up, and you don't have to have the premium version to do this, there's a video shows you how to do the multi-chart setup. I'll leave a link in the description. Not hard to do. Just access the tab, select two, ready to go. So what we want to do is we want to go back in time, and we do that with, I'm just scrolling down on my mouse, and I want to go back to the beginning of the week. Now, the beginning of the week for me was Tuesday, February 17th, because Monday was President's Day. The New York market was closed. I didn't trade on Monday because my margin account wouldn't let me do that. Now, we are on a paper trading account. Okay, you can see down here on the bottom left-hand corner. So everything we do today, or even if we were in a real trading account in our replay function, it wouldn't affect us. So anyway, we're going to go into replay mode in a minute, but we want to find out where we want to start our back test. I want to start my back test approximately a week ago. So I'm going to now go up to the replay function. And if you are using a two-chart setup, you want to make sure that you do the little pull-down menu, select all charts, and that way when the replay starts, both charts will sync up and you'll see price action on both charts at the same time. Okay, so we're going to do replay. I'm going to start a new one because I was in a replay mode a little earlier. I'm going to go back just before the New York session starts on Tuesday, and we'll take this little area right here where price action was moving sideways. Okay, now we're not done because what are we doing? We're back testing a strategy. So we want to mark out what's going to happen with our strategy. I'm on the 15-minute chart, and I'm going to single it out so that we can set up our strategy. The strategy that I use is to mark out swing points on a higher time frame. In this case, the higher time frame is the 15-minute chart. I want to go back in time, and I want to find these points of resistance and support that have significance. These are points that price wanted to react to. I'll say that. These are points where price wanted to react in one way or another. Now, I'm going to show you another indicator that's going to help you find these lines that I'm drawing. But for right now, I'm just doing the donkey work in finding my own points of support and resistance. Now, the strategy is this. Price will move to these points of resistance and either break through or bounce off. And what I'm wanting to do, I'm wanting to take advantage of those points of resistance, because what are these points of resistance? They are where traders have determined that price is either too expensive or it's cheap, 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 and I need to buy. Too expensive, I need to sell. Really cheap, I want to buy. You see this difference? Okay, so now that I've got my lines marked out, I know you didn't see me mark out that one. That's okay. We can do something else if you want to. If you're going to give me a hard time about it, I'll just draw in a little box that includes that guy, okay? Now, you're all happy, okay? Are you happy? I am too. Now that's not a bad thing to do right there, okay? Because price came up to that level and bounced off. Well, how many times? 1, 2, 3. And I would suggest that it may bounce off again, but we'll find out during our back test. I'm going to change this a little bit so it's not so obtrusive, okay? So now we're ready for our back test, almost, because there are a couple of things that I like to use for my back test, and that's volume. I like to see what volume is doing in association with these levels. Very, very important to me. At least my experience has been it's very important to pay attention to what volume is doing in relation to these points of resistance. The other one that I use is called Liquidity Location Director, and these are just indicators. There's another video that shows you how to access indicators. It's real easy. I'll put another link in the description. I'm going to show my liquidity levels. And as you can see, those liquidity levels correspond with all of those lines that I drew, okay? So those liquidity levels are places where orders have not been filled. We can talk about what kind of orders those are in a future video, but for right now, we're just doing the back test. We're wanting to see if our strategy works. I want to see how well my strategy works, okay? So now we're ready to go, almost. Going to do one more thing, and I'm going to call up the session volume profile. And it's going to show me where the market has had the most traders. And these are called nodes, these little areas right here. I'll zoom in for you. These are called nodes. High volume node, and then it retreats. That's called a low volume node. Now, I should at this point modify my lines a little bit, because those low volume nodes, those are areas that are key for trading. They can be very, very, very significant in terms of levels. Now, see, I got that one good. See that little low volume node? I'm right on target with that one. All right, so that I'm not going to leave those up there. These are just levels that have some significance that I want to pay attention to, okay, as I do my back test. They're just things I want to pay attention to. So I'm going to get rid of the session volume profile. I'm just going to hide it. I'm going to leave my liquidity up because I want to see it. I want to leave my volume up because I want to see it as well. I want to go back to my two charts because now I've got my higher time frame picture, what I call the big picture, and now I want to look at the smaller picture. And I'm going to wait until price hits one of these lines and then determine what I want to do, okay? So now I'm ready to start my replay, and I will start my replay by making sure I'm in the 2-minute chart, because the 2-minute chart is where I want to take my trades. It's where I want to determine my trade entry and exits. Come down to the bottom of the platform, and you can push the play button. And when you push the play button, it will start moving price. In this case, 1 second at a time. If I hit the 1x, it's 1 UPD per 1 second. That means 1 bar on the 1 minute time frame. Okay. The other thing I want to do, I want to be on the 2 minute, and I don't know why it's not giving me the 2 minute. It may not let me do the 2 minute. Well, okay, looks like I'm stuck on the 1 minute. That's okay, I don't care. All right, so what am I doing? I'm waiting for price to hit one of these levels. I want to have my liquidity indicator on this one as well. Okay, so now I'm seeing liquidity on the 15-minute chart, and I'm seeing liquidity on the 2-minute chart. Now, what I could have done, I could have set up my swing points on the 5-minute chart, and it would give me another set of levels that could possibly be traded from. Okay, so if I go over to the 5-minute chart here for a moment, and I look for another swing level, that looks like one that I could use. That looks like one I could use. Okay, so back over here on my 2-minute chart, I'm just waiting for something to happen on one of these key levels. Now, keep in mind we're Tuesday, February the 17th, and this is 12:30 in the morning. Okay, so what I'm going to do, I'm going to speed up my indicator, speed up my replay. And because I trade the New York session, I'm not going to concern myself with what happens during the London session right now. You'll notice what happens at these key levels. Price tends to bounce off of them or work through them sometimes. Depends on the market, depends on volatility, a lot of factors. And again, the back test is just kind of giving you an idea of what the market is doing. You'll notice on the 2-minute chart, I've got some big down areas, some big red bars on the volume, and price has broken through that point of resistance. And I'm going to wait and see if it will go reverse on me. And if it will close above that point of resistance, I will take a buy on a good bullish candle above. Yes, I got it right there. So I got it. I got the close. Got the close of the bullish candle on the 5-minute chart, and I got a close on a bullish candle on the 2-minute chart. So I'm going to take a buy. I'm going to set my stop loss. Like conservatively, I should put it here, okay? But I'm going to play it tight. I'm going to put my stop loss at the bottom of that last bullish candle, because I don't think that price will come back down that far. We will see. Now, what's my target? That's my stop. That's my stop right there. But what I think I want to target that next level that next level of liquidity. And I want to push through it actually a little bit. Let's see what happens. If I win 96 points or 96 ticks, which in this case is about $45 on my account with one contract. Okay, so here we go. We're going to take a look, see if I hit this little guy. I do not know if I will. Nope, got stopped out. Okay, so this doesn't always work. I did get some price action that moves in my direction. And what did it do? Now I'm in a learning process here. So I want to know, why did price come up there and not to the point where I thought it was going to go? I'm going to move my selector bar back to where I took my trade. And I want to look and see what the hey happened. So I'm going to click through one bar at a time and see what happened. Price went in my direction. Price went in my direction. Of course it pulls back. Of course it's going to pull back. And right there is where it topped out. Okay. So what did it do? Why did it top out? Well, if I look left a little bit, guess what? There was another price point, okay, on the 2-minute chart. It wasn't even on, yeah, it was on the 5-minute chart as well. And I didn't, and looks like I didn't mark it out. Well, even if I didn't mark it out, that price point right there was significant. Why? Well, because price turned around and went against me there. That's why it was significant. So again, I'm in a learning mode. I don't have to be right. I just have to be learning. Okay. So I got stopped out on this trade. Now, if I was really trading this, okay, I would have been paying attention to my volume bars. And because I've got a whole minute, I have 2 minutes. So I'm on a 2-minute time frame. Okay. I've got 2 minutes to look at my chart. And I could have seen that, oh, look, I've got a red volume bar appearing on the 5-minute chart over on the left-hand side. And I've got a big volume bar, right, on my 2-minute chart telling me, hey, all this upward momentum is over. You need to get out of this trade. So even if I would have waited to right here to get out of it, I would have still made a little bit of money, $10. Okay, it's $10 is $10. It's better than taking a $15 or $12 loss. Okay, so anyway, I lost that one. We're just going to continue to look through. We're going to push play again, see what happens. Prices moved through that price point. I need to move my line now, I think. Let's see if I have to. Yes, I'm going to move my line now because now I have a new pivot point. On the 5-minute chart, I have a new pivot point. And if price comes back up there and goes back up again, I'll take another buy. So here we go. There we go. I've got a close bar on the 2-minute, but I don't have a close bar on the 5-minute. So I'm not going to take the buy yet. It's still going down. It's still going down. Now I can see that I have another big level right here of liquidity. and I didn't draw a bar. I didn't draw a line here, which I should have. Okay, I'll draw it now. Actually, it should have gone right there. And because I can see on my chart that this is an area of liquidity, I have a good chance of knowing that it's probably going to push through it and then bounce up. And it did. On the 2-minute chart, it bounced up. On the 1-minute chart, I got this, on the 5-minute chart, I got this big wick, which means that price has rejected off of this area of liquidity. And on the next bar, now I get an up bar on the 5-minute. I've got 2 up bars on the 2-minute. I'll take a buy, a long position, and I'm going to put my stop right there on that liquidity level, 54 points. That's $26. Is that right? 54 divided by 2, $27. Okay. And I'm going to target that old level of liquidity, which is 177, we'll call it 174 points, 50 cents a tick, $87. Let's see what happens. Voila. Of course, I'm looking at my left-hand side. I'm looking at my larger time frame, which is the 5-minute chart. I could be looking at the 15, but in my case, I'm looking at the 5-minute chart. I had targeted that next level of liquidity on the 2-minute chart, and I made my $87 after I lost how many? I lost $20 on the other one, so I'm up $60 or so. Okay. I don't like keeping these, but I like winning. Okay. So now what am I doing? I'm looking for something else to happen on the chart. I have a new line that I need to draw. Okay, because now over here on the left-hand side on my 5-minute chart, I need to redraw that pivot point to represent that liquidity level that's just formed up there. So what happened? What happened up there? Price reversed, okay? And now I'm looking for another opportunity to get into the market. So I'm wanting price to bust through that again and come back down, or I'm waiting for price to come back down to that liquidity level. There it is, okay? And wow, we got a really good push through that liquidity level all the way up to a previous high, okay? And it looks like I'm going to watch the 5-minute chart here. We did get a sweep of liquidity over here. We got a 2-minute bar, a good 2-minute bearish bar. However, I don't have a bearish bar on the 5-minute chart yet. I do now, but I don't have bearish indicator on my volume, so I'm not going to take it. I'm going to click through it again. I'm going to wait till I get bearish volume before I try to do anything. And now, then look, the other thing is I'm doing a back test, so I'm having to look at a whole lot of things very, very quickly. We're into the New York session on Tuesday. Okay. I do not like to trade the first 15 minutes of the New York session. I know there's some gurus who tell you that you need to. I am just one of those guys that do not like to. So here I am. We're at 740, 742. We're 744. Now we're at 746. And what did I say I was looking for? I'm looking for another sweep of that liquidity, another break of that line up there, okay? or another sweep of this liquidity down here. That's what I'm looking for. If I don't get it, I don't want to trade. One of the gurus that I listen to a lot tells me don't diddle in the middle. And what is the middle right now? The middle is between these big 2 points of liquidity. My indicator never lies to me. It just never lies to me. It tells me how much liquidity is above and below these little swing points. So I'm just going to continue to push through. Now, again, we're in the New York session. This is the Dow. It can be pretty volatile on some days, and some days it can be pretty predictable. So what am I looking for? I'm looking for a liquidity sweep, which we're going to get right there, okay? And now I'm looking for an up bar above that line, and I'm looking for a green bar on both sides, the 5-minute and the 2-minute, because that's my strategy. I'm looking for something to tell me that, yes, I can get in now. So, yes, I've swept that liquidity. I'm above that liquidity sweep bar from the previous swing point, and now I'm waiting for a green bar on the volume side to tell me, yes, I can go. And there it is. I've got the green bar on the 2. I've got 2 bullish bars. Unless they're faking me out, I'm going to take a long position, and I'm going to target that next level of liquidity. That's 324 ticks. I'm going to set my stop loss down here at 179. And if we do the quick math, I'm not good at math in my head, so I have to use a calculator. I'm so sorry. So 179 divided by 2 is $90 that I am risking to make 162. If I wanted to be conservative, I'd pull my stop loss up to that point of resistance and reduce my loss. So I'm going to reduce my loss, reduce my stop, play it conservative, and not lose almost $100 on this trade if it goes against me. So now I'm looking at losing this trade because look over here on the left-hand side. I've got this really big red volume bar on my 5-minute, and I am going to lose this trade. So 113, I'm going to lose 113 ticks. Which is $56. I will lose $56 on this trade, okay? Sure enough, there was my liquidity sweep. Now I've got red bars on both sides. If I wanted to take a chance, I'll take a short position, try to get some of my money back, target the middle of that liquidity that's down there on my 5-minute bar. If I was really dangerous, if I was really thinking I could make something, get some of my money back, I'll do it like that. And set my stop back above the liquidity sweep line that was previously created. And now we're going to see what happens. When I got stopped out again. So I got my true liquidity sweep down here. I got my green bar over here on the left-hand side on my 5-minute chart. I've got good bullish momentum here. It did trade sideways for 2, 4, 6, 8, 10, about 12 minutes. It traded sideways, but it looks like it may give me back all of that I lost earlier. I'm going to put my stop again on that line because I don't want to lose a whole lot of money. Okay, so I'm going to put it just below that last bearish bar and hope for the best. And again, I'm keeping an eye on the left-hand side, see what's happening. If I get a red bar on either side, I will get out of the trade. Yeah, and I got a red bar on that side. So I would get out and I would make back $70, $75 roughly. So you can see how to do a back test, see how your strategy works for you. Again, you're using your back test as a learning tool. Don't get it confused with failure on your part, that you're a bad trader. No, you're trying to be a good trader. So what you want to do is use the replay as a measuring tool, a learning device. It'll help you with pattern recognition, and it will also tell you whether or not your strategy is working for you. Again, what you want to be doing, you want to be winning more than you're losing, because you're going to lose trades, as I demonstrated to you in my short little back test here. I lost some, but I won some too. The key is to win more than you lose. Okay, traders, that's all for today. Please like the video if you enjoy the content, and I will see you on the next one.